Okay, so get this, get this. You ready for this? We're going to dive into a company that's quietly
Right.
become this stock market like giant, and you've probably never even heard of them.
Okay. I'm intrigued. Lay it on me.
Comfort Systems USA, it's
Comfort systems.
yeah.
Huh. Okay.
Most people wouldn't know them from a hole in the ground, but they're actually the 13th best performing stock
Really?
of the last decade.
Wow.
Yeah, so we're gonna figure out why. Our source material comes from the Motley Crue,
Okay.
and we're gonna try to like break it down.
Right.
So Comfort Systems USA, their ticker is FX on the New York Stock Exchange. They're basically a contractor. They specialize in things like air conditioning, plumbing, electrical systems,
Okay.
mostly for new commercial buildings.
So not exactly the quote-unquote sexiest industry.
Right.
Right.
But over the past 10 years, this stock has delivered a compound annual growth rate of nearly 38%.
Whoa, hold on. 38%
Yeah.
per year. Compound.
Yeah, that means if you invested $10,000 back then, you'd be sitting on over $230,000 today.
That's nuts. That rivals like Tesla?
Yeah,
I mean, are they just like pumping and dumping or something?
I know. That's what's so crazy, right?
Yeah.
To put it in perspective, that is the kind of growth that rivals Tesla, and yet Comfort Systems is only followed by a handful of analysts.
So it's like a hidden gem. It's like an under the radar.
I know. It's like a total overlooked opportunity, and so that's what we're going to figure out, is like, how is this even possible?
Yeah, let's get into it. Break it down.
So a big part of their success has been a strategic focus on acquiring other companies, which makes sense in what's historically been a very fragmented industry.
Okay, yeah, I could see that.
So since 2007, they've spent an average of $82.5 million per year on acquisitions.
That's a pretty significant chunk of change.
Yeah, and that strategy seems to be working because their revenue has more than quadrupled
More than quadrupled.
in the last decade.
All right, so their strategy's working.
Yeah, but here's the really interesting part. There are three key reasons why this growth could actually be just getting started.
Okay, lay them on me. What's number one?
Okay, reason number one, the AI boom.
Okay.
Comfort Systems is riding the wave of increased demand for data centers and semiconductor manufacturing plants, which are like totally essential infrastructure for the artificial intelligence explosion.
Yeah, no, that makes sense. You need servers, you need chips.
Yeah.
You got to keep them cool. You got to have all the infrastructure. So that makes sense.
And with the U.S. government pushing to lead in these areas, the tailwind for Comfort Systems is likely to keep blowing strong.
So this isn't just like a flash in the pan. This could be a long-term trend.
Exactly.
Okay, I like it. What's number two?
Reason number two is they're flush with cash.
Okay, all right.
As of Q3 2024, they had a whopping $416 million in cash on hand,
Whoa, okay.
which is the highest they've ever been, and their debt has shrunk dramatically to a mere $68 million.
So they're not only making money, they're holding on to it.
Yeah, so this financial strength gives them a lot of flexibility to make, strategic move and reward their investors.
They could do a lot with that. Okay, what's number three? This is good.
Reason number three is shareholder love.
Okay, I like it.
Comfort Systems is in a great position to return value to its shareholders while they're continuing to eye acquisitions. They've also been buying back stock, and get this, they just announced their 12th consecutive annual dividend increase.
All right, so they're not just hoarding the cash, they're spreading the love.
Yeah, they're sharing it.
Okay, so that commitment to rewarding investors, that's a really positive sign.
Absolutely. It makes you wonder, how are they able to do this for so long? But of course, no investment is without risk.
Right.
The article does point out that the stock is trading at double its average price-to-sales ratio over the past decade.
Okay, so the market's valuing them pretty high.
Yeah, and plus, if the semiconductor industry hits a snag due to, macroeconomic factors, that could slow down demand for Comfort Systems services.
Right, because that's a big part of their business now.
Exactly.
So there's some risk there.
But as the article argues, sometimes it's wise to give the benefit of the doubt to a proven winner.
Okay, I can see that.
Comfort Systems has shown that it can overcome challenges, and its current business prospects look really strong.
So it's like a calculated risk. They've got a good track record, but there's always that potential for things to change.
Exactly.
Yeah, okay, I'm starting to see why this is such an intriguing company.
I know, right? It's like, who knew air conditioning could be so exciting?
Right, like this is the kind of deep dive I live for, uncovering these hidden gems. It's fascinating.
I know, it's so cool.
So what do you think? Is this a company you'd consider investing in?
I definitely want to do more research, but it's definitely piqued my interest. That dividend history alone is pretty impressive.
Yeah, 12 years in a row, that's not something you see every day. It shows a real commitment to their shareholders.
Absolutely. Plus, their positioning in the AI and semiconductor space makes them a really compelling long-term play.
I agree. It's like they're riding the wave of the future. But like we said, no investment is without risk.
Right. It's all about weighing the potential rewards against the potential downsides. And in Comfort Systems' case, I think the potential rewards are pretty significant.
I'm inclined to agree with you there. It's definitely a company worth keeping an eye on.
All right, so we've laid the groundwork for our deep dive into Comfort Systems USA.
Yeah, we've got a good overview of their business, their growth strategy, their financials, and even some potential risks.
What I really want to explore further is how they've managed to achieve such incredible success in what seems like a pretty, mundane industry.
Yeah, that's the million-dollar question. What's their secret sauce?
Exactly, and that's what we'll dig into in the next part of our deep dive.
All right, I'm ready. Let's get to the bottom of this. This deep dive into Comfort Systems really highlights how their success is really tied to this deep understanding of their market. It's not just about building air conditioners or plumbing systems.
Right.
It's about anticipating the needs
Yeah.
of a rapidly evolving technological landscape.
That's such a great point. I mean, they saw this coming wave of demand
Right.
for data centers and semiconductor facilities and positioned themselves
Totally.
perfectly to capitalize on it.
Yep.
It's a reminder that just like recognizing emerging trends can be just as important as having a solid core business.
Exactly. They weren't content to just stay in their lane, you know what I mean?
Right.
They looked ahead, they identified a huge growth opportunity, and they made the necessary moves to become a key player in that space.
Their commitment to acquisitions has played a huge role.
Oh, yeah, for sure.
In their success. It's not just about, expanding their footprint.
Right.
It's about strategically building a portfolio of companies that can collectively meet the increasingly complex demand of their clients.
It's a classic example of the whole being greater than the sum of its parts.
Yeah.
By acquiring companies with specialized expertise, they've been able to offer a more comprehensive suite of services, become a one-stop shop
I see.
for clients with large-scale projects.
It's interesting to think about the potential downsides
Oh, yeah, for sure.
of this acquisition-heavy strategy, for example. Could they potentially overextend themselves
Yeah.
or face challenges integrating all these different companies into their existing structure?
That's a valid concern.
Yeah.
There's always a risk that the company can bite off more than they can chew when it comes to acquisitions.
Right.
But so far, Comfort Systems seems to have navigated this challenge effectively.
Okay.
Their track record suggests that they have a disciplined process for identifying and integrating acquisitions.
And their strong financial position certainly gives them
Oh, absolutely.
more leeway to make mistakes.
Yeah.
That massive cash reserve acts as a safety net,
Huge safety net.
allowing them to take risks and weather any potential bumps in the road.
Exactly. Having that financial cushion gives them a competitive advantage,
Yeah.
both in terms of pursuing acquisitions and in terms of riding out any market volatility.
For our listener today who might be considering investing in a company like Comfort Systems, what should they be paying attention to? What are some red flags that might suggest an acquisition strategy isn't working as well as it should?
Well, I'd say one red flag would be a string of acquisitions that don't seem to make strategic sense. If a company is just buying up anything it can get its hands on without a clear rationale,
Right.
that could be a sign of trouble.
And it's important to look at how well a company integrates its acquisitions.
Oh, for sure.
Are they able to retain key personnel?
Yep.
Are they able to streamline operations and eliminate redundancy?
Those are all critical factors. If a company is struggling to integrate its acquisitions, it can lead to inefficiencies, cultural clashes, and ultimately a drag on performance.
Going back to Comfort Systems, their commitment to returning value to shareholders
Absolutely.
is another key element of their success. It's one thing to grow revenue and profits,
Right.
but it's another thing to consistently share that success with your investors.
Absolutely. That 12-year streak of dividend increases,
Yeah.
it's a testament to their long-term vision and their commitment to rewarding those who've invested in their journey.
It also suggests they have confidence in their ability to continue generating strong cash flow in the future. They wouldn't be raising dividends year after year if they didn't believe they could sustain it.
Right. It's a powerful signal to the market that they believe in their long-term prospects.
This whole deep dive has been really enlightening.
Yeah, totally.
It's made me rethink my own investment approach. I'd tend to gravitate towards companies
Right.
with exciting cutting-edge products or services, but Comfort Systems have shown that sometimes the most profitable opportunities are the ones that are quietly and reliably meeting essential needs.
It's a great reminder that we shouldn't overlook the potential of quote-unquote boring industries.
Right.
After all, even in a world of technological disruption, people still need buildings.
Yeah.
And those buildings still need heating, cooling, plumbing, and electricity.
And if a company can position itself as the go-to providers for those essential services
Right.
in a growing market,
Mhm.
the returns can be truly exceptional.
Comfort Systems is a perfect example of that.
Yeah.
They've proven that you don't need to be flashy or trendy to be a winner in the stock market.
All right.
Sometimes the best investments are the ones that fly under the radar.
It makes me wonder what other hidden gems are out there just waiting to be discovered.
Oh, I'm sure there's tons.
Maybe the next monster stock is a company that's quietly making plumbing fixtures
Could be.
or manufacturing air filters.
You never know.
It's definitely given me a new perspective.
I think that's one of the most valuable things about exploring different companies and industries.
Yeah.
It challenges our preconceived notions and opens our minds to new possibilities.
So before we wrap up this deep dive,
Okay.
are there any final thoughts you'd like to share with our listener today? What are some key questions they should be asking themselves
Yeah.
as they evaluate potential investments?
I think one of the most important questions to ask is, do I understand this business?
Okay.
If you can't articulate what a company does and how it makes money,
Yeah.
it's probably not a good investment for you.
It's a simple question.
Yeah.
But it's so crucial. Too often, people get caught up in hype or speculation
Totally.
without really understanding the underlying business.
Right. And another key question to ask is, does this company have a durable competitive advantage?
Okay.
What sets them apart from their competitors? Is it a unique product or service? Is it a strong brand? Is it a cost advantage?
Understanding a company's competitive edge helps you assess whether their success is likely to be sustainable over the long term.
Exactly. And finally, I'd say it's important to ask yourself, do I believe in the management team? Do they have a track record of making sound decisions? Do they seem to be aligned with the interests of shareholders?
Those are all great questions to consider. It's easy to get caught up in the numbers and the financials,
Yeah.
but ultimately, investing is about putting your trust in people
Mm.
to manage your money wisely.
And if you can find a company with a strong management team, a solid business model, and a track record of success,
Yeah.
you're well on your way to building a winning portfolio.
Sounds like we've uncovered some really valuable insights for our listeners today.
I think so. We've seen how a company like Comfort Systems, operating in an industry that might not grab headlines, can deliver some exceptional returns.
They've really turned that idea of like a boring investment on its head.
Yeah, exactly. And I think that's a powerful lesson for any investor.
It reminds me of that famous quote from Peter Lynch.
Oh, yeah.
Invest in what you know.
Invest in what you know.
But sometimes what we know is based on like outdated assumptions or limited perspectives.
Right. He was a big advocate for looking beyond the obvious, finding opportunities where others just weren't looking.
And that's exactly what Comfort Systems did.
Yeah.
They found success by quietly and consistently meeting essential needs in a growing market.
They've demonstrated that you don't need to be in a flashy or high-growth sector to generate impressive returns.
Their story really highlights the power of a well-executed strategy, a strong financial position, and a dedication to returning value to shareholders.
Yeah, those are the fundamental building blocks of any successful company, regardless of the industry they're in.
So as we wrap up this deep dive, what's the one key takeaway you want our listener to walk away with today?
I'd say the most important takeaway is this. Don't be afraid to challenge your assumptions about what makes a good investment.
Okay.
Be open to exploring companies and industries that might seem, boring at first glance.
Yeah, because sometimes the most rewarding opportunities
Right.
are the ones that nobody else is talking about.
Exactly. The next monster stock could be hiding in plain sight, just waiting for someone with a curious mind and a willingness to look beyond the obvious to discover it.
And that's what the deep dive is all about.
That's what we do here.
We're here to help you uncover those hidden gems and make informed decisions, so keep exploring, keep learning, and ever stop questioning.
Couldn't have said it better myself.
Who knows what you might discover?
Well, that's it for this deep dive. Thanks for joining us.
See you next time.